see that. But let's jump in here to module 4, which is how profiling markets can help you see what others can't. In module 1, we talk about, are you an investor or are you a trader? In module 2, we talk about the 4 behaviors that every auction exhibits, and how to see them. Markets exhibit. In module 3, we talk about 4 questions every trader should be able to answer before you put on a position. And kind of on the heels of module 3 and also module 2 is, how do we see these behaviors in the markets in such a way that we can leverage them as opportunities. In module 2, we talked about the fact that we are behaviorists. So while some people approach markets as fundamental traders or investors, meaning that they're looking at some kind of fundamental economic data, financial data to generate their decisions, and others are technical and that they're looking at some type of pattern, specific signal or instrument that they can overlay to arrange price. What we are looking at is we're looking at behavior. And the reason that we look at behavior is because behavior doesn't lie. If you've ever played basketball or you've played sports where you're chasing someone, you're often taught to watch their waist. And the reason that you're taught to watch their waist is because the other parts of their body, they can move and they can wiggle, and it can make you think that they're going one way when they're going the other way, but their waist never lies. And when we look at profiling and why it's so such an edge just in the way that you look at the market is because it's giving you an opportunity to see things which most people who participate in markets don't see and they don't think about. Now, you could look at that and say, well, if most people don't see it, then how is it effective? Which is a good question. And the reason that it's effective is because while most people don't look at it, this is what the professionals look at. This is what the large money managers look at. This is what the big institutional funds look at. These are the metrics that the big boys are playing. So if you can see where the big boys are playing, where the big money is, and you can align yourself with them, you're going to be in good shape. Okay, so let's dive in. As a reminder, as always, trading involves substantial risk of loss, and as we continue to refine your approach as we go through the modules, we're reminded that you need to make decisions on what you're comfortable with in terms of your risk profile. We're talking about build to profile of being able to use these tools and profiling tools specifically as a way to organize information and make better decisions. But we're also talking about your profile and how are you going to approach markets. You can have very different approaches and be very successful. I know lots of traders who are very successful and they all have a different profile in the way that they approach markets. The objective for the module tonight and that we're going to cover is understanding how profiling markets gives you an edge by helping you see what other traders can't see. And when I mean other traders, as I said before, we're talking about most retail participants, the amateurs, the ones who are trading and active, but are not looking at what the institutional and professional markets are looking at. So they're seeing half the picture and often are seeing half or less of the performance. Claude Monet, the painter, said once, "Eventually my eyes were opened and I really understood nature. I learned to love at the same time." When I, as a trader, learned to look at markets through these profiling tools and what they could show me, I can't imagine looking at them any other way. It really was like my eyes had finally been opened. Things that I was trying to figure out and chase down was like, why does price go where it does? How do some people seem to know when it's going to stop or when it's going to keep going, or how do they know when to press the trade and when to bail on the trade? All of these like macro questions that I had around trading, which were really wrapped up in like how do the markets work as an auction, which we talked about that in module 2 around these 4 behaviors that we see. And when we say the 4 behaviors, they're 4 repeating observable behaviors that occur over and over and over again in markets. And what we'll see is we profile and look at these tools, they allow us to see these behaviors very clearly, such that you can make some really, really great decisions. But it'll ruin you. You'll never look at a simple chart again. You'll feel like, man, I'm really missing a lot of the picture. The concept that we're really trying to drive home is that by understanding auction behavior, a profiling trader can discern and predict likely behavior. This was another thing that was a real eye-opener for me as I was around competent traders, that just the way that they showed up at the trading desk was wholly different than those who looked at traditional means of analysis in their decisions. I'd see fundamental traders who would say, well, this company's undervalued, and that economic report should be bullish. Why is price not going that way? That would be the one thing. And then I would see technical traders who would say, hey, this technical setup showed up and I took the trade. Why is it not working? And then I would watch profiling traders who would just sit there and seem to be unruffled by it all. They would, put trades on, they would take trades off, and they just seemed to have an ease about them. And that was something that was really attractive to me. They knew when markets to be really active in and which ones to stay away from, which I saw fundamental traders and technical traders an inability to really discern. We talk about this in Module 2, but just reiterating it again here in Module 4, is that when we're looking at a chart, when we're looking at a price, we are looking at an auction. We are looking at a continuous two-way auction that is occurring around a product. So for example, I'm going to pull up here a chart of the S&P 500, a primary US trading index, and we're going to look at, pull this over here. We're just looking, all we're looking at, so this is a candlestick chart. Notice there's nothing else on here other than these candlesticks. If we want to make it really simple, we can just look at bars, open, high, low, close bars. What this is showing us is it's showing us the open, the close, and the range of the day is the length of the bar. The color indicates the direction. So was the activity primarily buying or selling? Buying green bars, selling red bars. Okay, so this is a way to arrange price and arrange the auction. What it doesn't do is it doesn't help us see inside of these bars and see, okay, well, okay, yeah, that we had this move down here. What was the quality of that? How strong was that? Is there something inside of this that tells me why, even though we were looking to sell early that day, we came back? And are there days when we sell and we don't get follow through? Why is that? What allows us to gap like we have had here? These are things that if I'm just looking at price arranged this way, I don't get a full picture. But the profile allows us to do this, and it is, again, it's looking at an auction. It's going. The reason that the price goes up and down is because we have an auction that is two-way. And if we look at something a little more less than indices, if we look at, there we go. We look at something like crude oil, which has a lot more volatility to it in two-way action. You're seeing this auction going back and forth, as people are expressing opinion around whether they think that price is undervalued or overvalued. Everything that you think about in an auction is occurring. And things that I think about when I go to an auction, who are the participants? What are they trying to do? How good of a job are they doing? What am I willing to risk to participate? And what's the opportunity that I see? These are similar to the questions that we ask in Module 3 around the 4 questions that you need to ask before you put on a trade. Imagine that I was at an auction where I see it was an art auction. There's a piece of art that I want. Maybe it was a Monet, for example. and I would like to bid on that piece, and yet I see that there are other participants at the auction who are far more capitalized than me, and they are also interested in the Monet. Do I have a chance of winning that thing? Probably not. And if I could see that and know that they're active, then I would stay out of the way. But if I look around the room and there really isn't anybody who's well-heeled, and most everybody's kind of at a decent capital level, the behavior is going to be a little bit different in how I'd act in an auction. The same thing happens in financial markets. I'm ashamed to say, and I often say this, that it took me a couple years before I even realized that when I was looking at trading and investing, what I was really looking at was I was looking at an auction. And when I realized that, I was like, oh wait, I know how auctions behave. I know auctions that I want to be in. I know auctions that I don't want to be in. That's really helpful. So then, you know, when I start looking at a, you know, chart like this, which is again, it's just a way of arranging the auction price. It's starting to tell me a picture, but it's not a complete picture, because again, for each of these sessions, and this one is looking at days, it's just not giving me a lot of information about what's going on. Relative to if I look at it like this, and this is looking at how a profiler looks at the market. So this is the exact same chart as the one that I saw before, but there's a vastly increased amount of information that can help me make decisions. So, you know, what is it exactly? What exactly is profiling? It's not a trading system, so it's not like it triggers trades for you or you know, alerts. It's just a way of arranging market information and price data so that you can make decisions. And why this is so important is because for most every trader, and when I mean most, I mean like unless you're looking at a capitalization or participation level in the 10 million cap or higher, you often can't stay long enough as a fundamental trader for the fundamentals to sync up. So like when you look at the price, you look at the fundamentals and you say, okay, well the price is moving lower, but the fundamentals are bullish. Eventually those converge. That does happen. The question is, can you be solvent long enough for that to happen? Or when you look at the technicals, you go, okay, well, you know, this signal is a signal to signal. How long can you see those signals be wrong before it turns around? And it depends on how capitalized you are. And I can't know all of the reasons behind, you know, why price is going where and who's moving the needle. And you can't either. What we can though see is we can see behavior. We can see how people are acting around price in the session, and that actually tells us all we need to know. It tells us who's interested. It tells us how interested they are, and it's a little bit akin to economists who, when they give survey, they don't give surveys. Economists never give surveys because people lie. Instead, they just observe behavior, because behavior tells you everything you need to know. It's how people behave is actually how they you know, perceive and how they act. So when we're profiling markets, we're arranging the market generated information in a way that's telling us, well, what is the real story that's going on? And we're not getting wrapped up in the fundamental story, and we're not getting wrapped up in the technical story. We're getting wrapped up in how our participants acting around price. And it's very helpful. It's a leading, not a lagging indicator. Meaning, if you look at things like some of these terms that some of you will be aware of and some of you will not, but things like oscillators and stochastics, moving average crossovers, linear regression trend lines, Bollinger Bands, Ikumoto clouds, you know, all these different ways that people try to, you know, arrange price. They're all derivative of price. They all exist after price has done whatever it's done. So the indicator is always lagging where price is. Profiling is on the bleeding edge. It's where the action's happening. And for me, I think I think of trading and investing as a business. So if I'm going to be active in that, I want indicators that are telling me what's happening on the front end. I don't want the stuff that, you know, it's lagging so far that I can't make it a good decision. I want to be out where it's happening. Again, it's a proven institutional tool. You know, really great affirmation for me was Even just this last March, I was at a conference with a bunch of other market participants, brokers, institutional players, and guys were saying, hey, look, when I was trading on the floor in Chicago, these are the tools that we used. When we're making decisions on what we're positioning on, these are the tools that we use. So that tells me the validity of the tool. It also told me, interesting thing is that, they would say that they would never look at fundamental reports. So, if you watch CNBC or Bloomberg or Al Jazeera Finance or, whatever the outlet is that is news driven, you find there's, all of this talk and discussion about, well, this is going to be this, and this is undervalued, and this is this story and that story. And guys, I've gotten to a place where I don't watch any of it. I don't have to. And in my life is so much simpler because I can just look at the auction and look at the price and what it's doing, and it's all I need to know. And the reason why I continue to lean on it, although the idea around profiling is about 35 years old, is that really all profiling is doing is it's codifying and it's describing human behavior, and human behavior when it comes to opportunity has not changed in millennia. So I can trust that. And even in an age of algorithmic trading, algorithms are programmed by humans. So until we get to really, really hyper advanced AI that can think at a level that humans have never been able to think, and we're not there yet. There's still this is really incredible opportunity that it reveals auction opportunities. And to that end of how it reveals opportunities, it really has to do with the idea of value, and profiling helps you see value. So if I think about an opportunity, I think, what do I want to do? People always say, well, buy low and sell high, right? That's easy to say. It's hard to do. How do you know that you've bought low? How do you know that you've bought high? You don't. When you're looking at just a price chart, you have no idea. However, profiling adds into an idea around value, and value being defined as how much volume and or time is spent at a price. Okay, so how much volume and or time is spent at a price. This gives us an idea of where people are agreeing on price. So, for example, what's a specific, is there a stock or a future or some product that you like to trade? I can pull it up here on a chart and we can take a look at this. What I mean by a value. So this is a popular product. This is, let's just check the time frame here. So we're looking at weekly bars. This is 30-year Treasury bond futures. And say I wanted to look at really the last. Well, I'm really interested in this move. So if we look at this move here, and we'll change colors here. At this move here, okay, everybody, we can all see that move right there. All right, what I'm going to do here is I'm going to actually draw a profile over this. And what this is showing me is that on this move, the most accepted price, so the highest value of that move, is all the way back up here at 172 and 11/30 seconds. Okay, then I have other areas here and here and here. And these are, we'll talk about these later in the module, but these are nodes, volume nodes. This is showing us volume at a price. The wider the node, the more acceptance there was of participants that was a valid price. Everybody agreed, because if we spent time there and we did a lot of transactions, everybody's saying, yep, I agree, that's a good price. And that will happen for a while, and then you'll go on to another price. So if we look at that from that move, and then we look at since the move, which really goes all the way back to the last US general election. Okay, we notice that we have this really, really big area right here at 154 in about 15-30 seconds. Because bonds trade in ticks, specifically 32 ticks per handle. Don't worry about that if that's a new terminology to you. We're going to talk about that when we talk about futures and how to trade them with the profile. But yeah, it's going all the way back to November, or really this early December of 2016 till now. The fairest price is right here. So where are we relative to that? We're below it. So this is an opportunity to buy low, because you're buying below value. All right. When we were trading up here, we were what? We were above value. So that's a way to sell high. Okay. Now all of a sudden I'm seeing it from a wholly different picture, because I can see inside of what's happened in just, aside from just price on, in a session, I'm looking inside that to see the quality of that price, and that's giving me some pretty incredible insight. Value being volume and or time at a price. And then one of the things that we look at is something called a value area. And this is where 70% of the trade volume occurs in a specific session. And why this is important is, if you've ever studied statistics, you'll know the idea of the statistical mean, and then that which is called one standard deviation away from the mean. Outside of that, you have an outlier, 2 standard deviations from the mean, things that are exceptional. The way that the profile arranges price is it does so in such a way that we see price like this. So if I see price outside of this bell curve, so we're going to look at one here in a second. You're going to go, oh my gosh, yeah, it is a bell curve. If I see stuff like that, that's exceptional, and that is that tells me something about how I want to deal with that price and how many people are participating in it. Okay, so if we go back here and look at, for example, okay, we're just going to hone in on this thing right here. So this is one session. This was December 22nd, and this is NASDAQ futures. And what this is this is a profile. We call this a market profile. There's actually 2 different types of profiling. There's a market profile and a volume profile. But really all this is doing is this is just arranging 30-minute candles or bars. So each letter represents the price range that we're seeing in that 30 minutes, which, when it goes out like that, you're like, oh yeah, that makes sense. But then when you collapse it, you start to see that it actually starts to take on the shape of a bell curve. And it actually has a statistical mean. We call this a point of control. And then there's a value area around that where 70% of that trade took place. So that means that all of the prices up here were above value. All the prices below here were below value on that day. So, do you want to be selling down here? Maybe if your time frame is past that day. Do you want to be buying up here? Maybe if your time frame is past that day. But if you're looking at just that specific day, you would be selling below value. So you're selling low, or you're buying high. Okay, so this is not how we want to play to win. Buy below value, sell above value. Okay, benefits of profiling. Then this is really exciting. One, it works in any and every market environment. Now you will find as you get more involved in markets, or maybe you've already found this because you've been in markets for some time and are just struggling, you may find that you have a setup or approach that it seems like in certain market cycles it's really effective, and then you'll find in other market cycles where it doesn't work at all, and you're just really frustrated. You're like, what in the world? Profiling works whether it's a high volume or low volume market setting. It works whether there's a high volatility or low volatility setting. It allows you to have a consistent approach, irregardless of other facets that are introduced in the market. You can know with clarity when you are wrong or right. This is absolutely crucial for someone who's going to be an active a trader or investor. Not so much knowing when you're right, but knowing when you're wrong and cutting. You'll hear this, man. If you haven't already heard it, you'll hear it all over the place. People will say, well, cut your losers and let your winners run. How do you know? I think that's like a platitude that people put out there to try to sound impressive. Yeah, obviously, duh. I'm going to let my winners win, and I'm going to let my losers. I'm going to try to reduce those. But how can I actually define a level that hey, if I hit that, I'm out. I'm wrong. Profiling allows you to do that with clarity. You can say, yep, if I go to this, sometimes it's by a penny, then I know that I'm wrong. That's total advantage over anything else out there. It defines expected versus unexpected behavior. This is also helpful. When I was first starting out, I would sit down at my trading desk every day, and I had this expectation that I didn't know what to expect. I expected every day to be the same. I expected the opportunity to be the same every day. So there would be days when I was in the trade and I took them off because I was like, well, opportunity is the same every day. And that trade just kept running and running and running and running. It would have been a huge day, right? And I didn't know. So, I leave frustrated. Or there were days when I seemed like I sat around all day long and there was no opportunity. And, how did I know that? It helps us expect behavior and what's going to come in the next session and extremely, extremely well. It adapts to any time frame. So whether you want to trade, whether you want trade duration that's 5 minutes or you want trades that are several days, it adapts to any time frame. And it can help you know when to trade and when not to trade. This is also really, really helpful. Knowing, hey, there's a day that I don't want to be active because I see how it's behaving and I see what how the profile is building. Or I don't want to be active until 3 o'clock Eastern. It can tell you that too. Very, very helpful. It really explains why markets do what they do. Other benefits, it helps you make decisions as the auction is developing. So it's on the it's on the front edge of what's happening that's helping you make decisions. It uses what you already know to make you a better trader. So once you understand how to discern the profile, it's taking what you already know about what would be a good business endeavor, what's a good opportunity, where can I identify a good risk to reward ratio. It's bringing all of that to bear in a really good way. It can help you express directional probabilities, which is key. Like you can look at a trade and say, hey, that has X percentage of probability of success. It also makes reoccurring auction behaviors apparent. One of the things that we look at as profiling traders is what we call day types and open types. They're actually repeating observable structures that occur over and over and over again. And once you know how to identify them, you go, oh, yep, that's going to be this. So that means that this is most likely going to happen. And I will do this when that happens, right? Very, very helpful. And really also can provide an edge by removing the noise. What I mean the noise is when in traders that I've worked with before in my own trading, you see people making decisions on every little wiggle that price makes because of the way that the profile arranges the information. It basically says, you know what, here's prices that I'm interested in participating. And if we're not touching that, then I don't care. I'm just going to let it do its thing, which is also really helpful in terms of like not having to feel glued to the screen all the time. Now, I've been pumping it and talking about how great it is. I want to be clear, there are some drawbacks that you need to be aware of if you're going to use profiling, which I think you should, but here's the things. One is it requires discretion. It's really hard to automate. You may be a great coder. You may be able to write software. I've been working with software engineers on a couple different approaches and systems, and I will tell you it is very difficult to program. It can be programmed in a way that it can give you specific alerts, but in terms of actually generating trade ideas off of that, it's still very discretionary which is why I find profiling traders still having an edge over algorithmic trading in terms of win rate and win size versus loss size, because they can so clearly define them. It does require critical thinking. So if you want something that just tells you buy here, sell there, it's not going to do that. And so I know that there are systems that you can go out. I've looked at them where it'll tell you buy, sell. Okay, if you want a system that's going to tell you to do that, go do that and live with the results. I think there'll be a couple clicks above meager at best. At first, when you're spending time with it, it looks like you're looking at the matrix. I'm looking at this, and this is telling me all kinds of stuff. And I'm sure if you've not spent any time with Profile, you're looking at that and going, I have no idea what I'm looking at. So it very much looks like a foreign visual language at first. But once you get comfortable with the structures and know what you're identifying, it's extremely powerful. Other drawbacks: the tools are often expensive. Again, because these are the professional tools. They're mostly used by the guys that put the money down to have them in front of them. They're not often available to retail traders. So getting the Cadillac tools and be able to see everything you want to see, it is also often pricey. I think of it like a business expense. I want to have a great business, so I want to have the best tools. If I was a contractor and I was building buildings, I would want tools I can depend on. So that's why I continue to invest in profiling software. How will it help you make better trading decisions? Well, one, it answers one of two questions. One, which way is the market trying to go, and how good of a job is it doing in getting there? This one's key. How good of a job is it doing in getting there? So we can easily look at an auction and we look at price and go, oh yeah, it's going here, or it's going there. But if for example, if I think of like a housing auction or housing market, I can see market prices going higher. But if there are fewer and fewer transactions as we go higher, that's telling me something about that market. And if I was a buyer, what's it telling me? It's telling me, hey, you know what? Hold off. At the worst, the thing's going to cool off and at least trade sideways and give you an opportunity, or it's going to pull back and find other participants and give you a better entry rather than chase it higher. Opportunities that can be found with profiling, we look at auction anomalies is one thing that we identify. We look at unfair highs and lows. So like we talk about on the bell curve, if we're above value or below value, we look for opportunities there. This is an interesting thing. If you spend much time around markets, you'll hear people talk about an auction as, hey, it's overbought or it's oversold. And I'm here to tell you there is no such thing. No such thing as overbought or oversold. Especially, and how most people talk about it. They'll look at some instrument that says, like it's an oscillator or a stochastic that gives a specific mathematical reading to say, hey, it's overbought or oversold. And I've seen those things pegged for days, weeks, and people are trying to, position, and they're just getting run over. Auctions do not get oversold or overbought. They get exhausted or accepted. So the profile allows you to see, is it going to be exhausted or is it going to be accepted, which is a better one. We also look for opportunities where price in relationship to prior value. So, value is established each day in each session, and we can look at the current session relative to the prior session and say, okay, are we trading above the accepted value from yesterday or below that? So then if that's the case, what do I want to do? That gives us an opportunity. And then as price goes in a direction, is it pulling value? Are other participants participating at that new price level? If they are, then we're likely to continue in that direction. If we don't, then we're likely to fail and go back to a prior value. Or is value pulling price? That's where if price goes in a direction, we can't get any more participation in that direction, we then revert and go back in the other direction. All right. Now, let's dig a little bit deeper here into anatomy, specifically market profile anatomy. So there's two types of profiling. There's market profile and volume profile. So let's talk about market profile anatomy. These are TPOs is what, so when I look at a market profile chart, okay, each one of these letters are what they call a time price opportunity. Essentially what it's saying is that at that time, price was offered in this range. Okay, so if I expand this, you know, in the first 30 minutes of the session on the 22nd, in A periods, price was offered from 64.88 down to 64.67 in the NASDAQ futures. Okay, that's a time price opportunity. There's something that we look at called the initial balance. The initial balance is the sum of the first hour of trading range. So if I look at A period and B period together, so here's B period, this is the range we call this, what this green bar is. This is the initial balance. 80% of all trading volume occurs in the first hour. So one of the things that we look at is how wide is this first hour's range. That can help us get an idea of what is yet to come in the session. Range extension is where we exceed that initial balance. The point of control is the price that we spent the most time at in the market profile. The value area is where we spent, you know, that 70% of time. The value area high is the top of that range, and the value area low is the bottom of that range. All right, so as I look at this and I collapse this graphic, all right, spent the most time here. Here was the value area high, here's the value area low. We had range extension in these, it looks like in J, K, and L period. Okay, this is organizing price by time. Now, volume profiling is slightly different. So we look at volume nodes, high volume nodes, low volume nodes. We look at the point of control still, but we look at the volume point of control. So rather than the most time spent at a price, we look at the most volume at a price. We still have a value area, but the value area is built on volume, not time. We have a value area high and a value area low. I will tell you that some who look at auction theory, which is the underlying idea around profiling, spend a lot of time thinking about these things, value area high and value area low. I would say don't spend a lot of time there. The reason why is if it's 70% of the trading range, how exceptional is that? But the point of control, that's exceptional because that was the most traded price, and that's a prominent reference point, much more than a value area high or low. Now, when I talked about high volume and low volume nodes, so on this chart, we have this is a volume profile of today's session in the NASDAQ. This is actually multiple days. So you can see a high volume node here, low volume node here, high volume node here, low volume, high volume, low volume. And we look at these as reference points because there's certain expected behaviors that occur at these areas. And, you know, one of the questions I get is, you know, what, you know, there's volume profile, market profile, you know, which is better? I still use both, and we'll talk about why. But when the tool was originated, one of the things that they couldn't do is they could not pull real-time market data, volume data. So they used time as an approximation. The idea was if I spend an amount of time at a price, then I'm probably doing a volume of trades there. Once they could pull volume in real time, they certainly looked at volume. But when I look at the two tools and why I continue to use them in tandem is that market profile helps me discern probabilities and behavior, and it shows these structures. The volume profile helps me discern levels of support and resistance. You know, levels that I can hope that the auction will be held up, and levels that I think will hold it down. So when we talk about in Module 5 using profile to find probable prices, we often use volume profiling as a way to target levels that we want to be active at. We use market profile to give us an expectation of how's the day going to go, because there are these observable. Okay, a couple profiling platforms. You know, in Module 11, I believe, we talk about specifically the trading system and putting together your software and what do you need to be able to be active, but specifically to profiling. Here are a couple different software products that you can use to, you know, get immersed in it. The product that we're looking at right here is called Window Trader. This is really the Cadillac of products. This is about the best that you can get. It's also fairly expensive. I think of it as that you pay for what you get. Linsoft from Investor RT, or Investor RT from Linsoft, is also a good product that has both offering market profile and volume profile. Thinkorswim from TD Ameritrade, they have market profile. They call it monkey bars. The reason that they call it monkey bars is because market profile is actually a trademarked term from the Chicago Board of Trade. So they can't say, hey, this is our market profile tool. You know, they call it monkey bars. Drawback there is you have to have a brokerage account with them to be able to use that product. TradingView.com is a really cool product that actually incorporates some profiling. It's volume profiling only. It doesn't offer market profile. CQG is a long-time institutional platform that offers both volume and market profiling. CTS, or Cunningham Trading Systems, T4 platform, also offers market and volume profiling. And then finally, NinjaTrader, which is a platform that you can execute trades on and also do analysis. Although it doesn't come native with profiling, you can get plugins into the platform that allow you to look at profiling. All right, let's talk about some homework real quick, and then if you have some questions, feel free to shoot those in the Q&A, and we'll go over them and we'll wrap up. One, pick a trading product. Any trading product. It doesn't matter whether it's a stock, future, forex pair. Now, we'll have a caveat around forex, which we'll talk about when we get to the module on trading forex, which is module 10. Because forex pairs don't show you volume, you can only use time profiles, but time profiles still are effective. Or you can use futures data, which gives you volume profiling to look at forex. Again, we'll talk about that more in depth when we talk about forex, specifically module 10. But for right now, pick a trading product. I will just say use a stock. That's probably the easiest way, and use some type of profiling tool, specifically volume profiling. Okay, so this is just looking at the peaks and valleys. If you have access to some type of platform that allows you to do that. If you don't, shoot me an email, and try to get you the way to play with it as cheap as possible. Probably the easiest way would be go to TradingView.com and sign up for an account there. I think you can get like their pro features for a month, which has volume profiling in it, to give you an opportunity to play with it for free. And so you're going to identify high volume nodes in both prior sessions and cumulative volume profiles. And then you're going to watch and review behavior of price at these nodes. This is key. How price behaves at these specific high volume nodes. And again, when I'm talking about a high volume node is when I look at a composite auction, or I look at this long term. And if I come into these areas where there's high volume nodes or low volume nodes, it's very, very insightful what price does around these, specifically the wider this node is. And I'm not going to give it all away. I want you to kind of wrestle with it a little bit and see what insight arrives, and specifically how does price behave. Once you spend some time with that, again, continue to go back, review the video, complete the homework, and proceed to the next module. If you need any help, as always, shoot me an email or give me a call, and I'll point you in the right direction. I'll either say, hey, we're going to talk about that in a coming module, or that's actually outside the scope of this course, but here's where I would go to explore that deeper. One of the objectives of this course is just to give you a great foundation for how to start, and then point you in the direction, for future learning. So, if you get all fired up about, man, I want to trade Forex with futures, I've got resources to point you in that direction. Or you're like, hey, I want to really dive into how to use options with the profile. We'll go that direction. Or, hey, I really want to own stocks. We can go from there. But that's it. That's module 4, how profiling markets can help you see what others can't. Really, like I said at the onset, it's once you see it this way, you can't really see it any other way.